At Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nests to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hock Soon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hock Soon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hock Soon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hock Soon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled. Every risk is managed. Every regulation met. From permits to paychecks. Ensuring legal, fair, and quota-compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, Electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into accessible delights for everyone. We combine premium quality with affordability, driving product innovation, and leveraging our extensive distribution network to reach more markets, mini market, supermarket, and hypermarket. From HSS to LHMC and Kasaga, our commitment to quality, innovation, and customer satisfaction drives us forward. Join us in bringing incredible bakery products to the world. HSS, your trusted partner in bakery excellence.
Go!
Rest and go.
Good afternoon, investors. You are now on KleverStock with me, Dini, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Opening today's market wrap with a look on the domestic front, Bursa Malaysia entered a cautious consolidation phase at the start of the week, with the benchmark FBM KLCI dipping marginally as early selling pressure on major banking heavyweights outweigh buying momentum in the energy sector. After briefly opening 1.2 points higher, the main index turned flat and eventually edged down 1.49 points or 0.09% to stand at 1,729.76 at 9:17 a.m. In a market commentary, Berjaya Research noted that the local bourse is consolidating its recent gains against a cautious international backdrop driven by renewed Middle East geopolitical tensions and an overnight pullback in US chip makers. Institutional investors are expected to remain highly selective as global attention pivots toward upcoming US corporate earnings, where major tech conglomerate results will likely dictate near-term risk appetite. Domestically, market participants are watching closely to see if Malaysia's resilient macroeconomic growth metrics convert into stronger upcoming quarterly balance sheets. From a technical standpoint, Berjaya Research highlights that the key index has formed another bullish candlestick, pegging immediate resistance levels at 1,740 and 1,750 points, while placing primary downside support buffers at 1,712 and 1,700 points. Looking at active corporate movers, the broader financial sector faced clear downward pressure. Banking giant Maybank fell 8 cents to trade at 11 ringgit and 12 cents, while Hong Leong Bank and RHB Bank both dropped 10 cents to sit at 22 ringgit and 34 cents and 8 ringgit and 43 cents, respectively. On the retail front, furniture provider SSF Home Group shed 8 cents to trade at 30 cents. Providing a vital cushion against the banking pullback, oil and gas heavyweights posted solid early gains. Petronas Chemicals Group advanced 22 cents to 4 ringgit and 93 cents, while Petronas Gas edged up 22 cents to 17 ringgit and 66 cents. High-value industrial and technology stocks also captured strong selective buying, led by Panasonic Manufacturing Malaysia, which surged 48 cents to 5 ringgit and 78 cents, and semiconductor assembly specialist Malaysian Pacific Industries, which added 26 cents to reach 43 ringgit and 46 cents. Moving on to our local currency and foreign exchange. The Malaysian ringgit kicked off the trading week on a firm footing this Monday morning, drawing strong fundamental support from tough domestic economic estimates. Data released on Friday by the Department of Statistics Malaysia revealed that the national economy accelerated to an impressive 5.8% year-on-year growth rate in the second quarter of 2026, building on the 5.4% expansion logged in the first quarter. At the 8 a.m. opening bell, the local currency strengthened to trade at 4.0920 to 4.0995 against the American dollar, recovering from Friday's closing baseline of 4.0930 to 4.0990. However, Bank Muamalat Malaysia Chief Economist Dr. Muhammad Afzanizam Abdul Rashid noted that global forex markets remain heavily anchored by escalating geopolitical friction in West Asia. Military exchanges between US and Iranian forces have sustained global safe haven demand, lifting the US dollar index by 0.08% to reach 100.846 points. Dr. Afzanizam highlighted that while Malaysia's strong economic growth provides a solid underlying backing, geopolitical headwinds could keep the ringgit trading on a slightly softer trajectory over today's session. He expects the local currency to navigate an operational band between 4 ringgit and 9 cents and 4 ringgit and 11.65 cents against the greenback today. Across major international currency markets, the ringgit posted broad gains. It edged up against the British pound to trade at 5.5017 to 5.5118, strengthened versus the euro to 4.6759 to 4.6845, and appreciated against the Japanese yen to 2.5177 to 2.5225. On the ASEAN front, the local note advanced against the Singapore dollar to 3.1664 to 3.1727, strengthened against the Indonesian rupiah to 228.3 to 228.8, and climbed against the Thai baht to 12.1504 to 12.1781, while holding completely unchanged against the Philippine peso at 6.64 to 6.66. Now for some economic news. Top domestic investment houses are projecting Malaysia's inflation trajectory to remain firmly manageable throughout this year, discounting the need for any immediate monetary intervention by Bank Negara Malaysia. Despite mounting external upside risk driven by volatile crude oil prices, electricity tariff base effects, and weather-driven agricultural supply disruptions, core economic indicators suggest price pressures will stay under control. Equity research firm Public Investment Bank projects Malaysia's Consumer Price Index to rise 2.1% across 2026, while Hong Leong Investment Bank has maintained its full-year inflation forecast at a stable 2%. Given these contained underlying pressures, both research houses see little justification for Bank Negara Malaysia to ease or adjust monetary policy, expecting the benchmark overnight policy rate to hold firm at 2.75% through the end of 2026. Data shows that headline inflation registered a slight cooling to 1.9% in June, matching a similar drop in core inflation down to 1.9%. While second quarter inflation averaged 1.9%, up from 1.6% in the first quarter, analysts emphasize that current price dynamics are largely cost-push rather than demand-driven, keeping the threshold for interest rate adjustments exceptionally high. A major element insulating domestic consumers from global energy shocks remains the government's targeted fuel support frameworks. Even as Brent crude benchmarks fluctuate above $80 a barrel due to geopolitical friction in West Asia and maritime transport bottlenecks along the Strait of Hormuz, the federal Budi 95 program continues to cap retail prices for eligible users at RM1.99 per litre. While secondary logistics, packaging, and distribution expenses could gradually pass through to the broader market over time, economists remain confident that existing fiscal cushions will successfully prevent broader inflation spikes. We will now take a short break, but don't go away. We will return shortly with corporate news developments. Welcome back to the Midday Roundup. Let's continue with some corporate updates. European plane maker Airbus is eyeing substantial commercial potential for its single-aisle A220 jetliner across Southeast Asia as regional carriers pivot toward developing point-to-point routes connecting secondary and Tier 2 cities. Speaking at the International Air Transport Association's 82nd Annual General Meeting, Airbus Asia Pacific President Anand Stanley noted that the A220's specialized range and lower seating capacity make it uniquely suited for geography-heavy regions like Indonesia and Malaysia, allowing airlines to serve lower density routes efficiently without burning excess fuel or risking low load factors. Global momentum for the A220 program has officially crossed 1,100 total firm orders, fueled by aggressive commercial uptake across the Asia-Pacific region. In the first 5 months of 2026 alone, Airbus logged 815 gross orders globally, with over half originating from Asia-Pacific markets. Looking ahead over the next 2 decades, Airbus projects regional demand for nearly 20,000 new commercial aircraft, with approximately 16,000 units consisting of single-aisle narrow-body jets, ideal for intra-ASEAN expansion. A major catalyst driving this regional momentum is a landmark purchase agreement signed by Malaysia's AirAsia. The budget carrier placed a firm order for 150 A220-300 aircraft, marking the largest single firm order in the program's history, alongside options for an additional 150 units. Planned for initial delivery starting in 2028, AirAsia will serve as the global launch customer for a newly designed high-density 160-seat cabin layout. Airbus emphasized that AirAsia's massive commitment demonstrates the A220's versatility for low-cost budget carriers alongside full-service operators. The A220 is already actively flying across the broader Asia-Pacific region with full-service airlines such as Korean Air, Qantas, and Air Niugini. To support the fleet's rapid growth across ASEAN, Airbus confirmed it will provide pilot transition training and collaborate with regional stakeholders to establish dedicated local support infrastructure, including flight simulators and maintenance facilities. Up next, we have a market update. Petronas Dagangan Berhad continues to maintain stable fuel supply and inventory levels nationwide despite ongoing geopolitical friction in the Middle East. According to a research note from Hong Leong Investment Bank, the group's integrated inventory management system, backed by automatic tank gauging technology and close coordination with parent company Petroleum Nasional Berhad, has successfully ensured uninterrupted fuel availability across petrol stations throughout Malaysia. Under current operational protocols, fuel inventories are typically maintained at 3 to 5 days at retail petrol stations and 3 to 10 days at storage terminals, depending on product type and localized demand requirements. HLIB noted that this supply cushion is further reinforced by government assurances that Malaysia's domestic petroleum and fuel reserve will remain completely sufficient through end 2026, backed by state measures to safeguard national energy security amidst Middle East uncertainties. However, HLIB expects PETDA's retail segment performance to moderate in the second quarter of financial year 2026, following a sharp pullback in global crude oil prices. After a first quarter surge in Brent crude prices lifted retail EBIT margins to 5.1% from 2% in the previous quarter, prices have since dropped by approximately 38%, averaging $73 per barrel in the second quarter. Analysts expect lower Brent prices to normalize inventory gains in the retail division, while commercial margins should see improvement as jet fuel pricing lags ease, though softer aviation fuel volumes may temper the overall recovery. Despite near-term retail moderation, HLIB maintained its buy recommendation on Petronas Dagangan with an unchanged target price of RM21.34. Finally, wrapping up, we have major corporate developments and deals across Malaysia. Astro will sell a non-core commercial property in Dengkil to AIMS Central for RM92 million, unlocking value above its independent valuation while improving capital efficiency. Lotus Circular plans to sell its 55% stake in Miroza Leather for RM38 million, exiting the retail business to focus entirely on its core waste recycling operations while unlocking value from a declining retail asset. Sorrento Capital has secured SC approval to transfer to Bursa Malaysia's main market, supported by its growing market capitalization and improved financial performance. CPE Technology is investing RM34.52 million in advanced CNC machinery to expand production capacity, improve efficiency, and strengthen its high-value manufacturing capabilities. Stratus Global posted RM34.84 million in revenue and RM9.55 million in net profit for its maiden first quarter financial year 27 results. PTT at Synergy is acquiring $7.11 million or RM29.11 million logistics software systems to enhance operational capabilities and support its integrated logistics expansion. Silverreach secured a RM6.25 million subcontract for construction works at a mixed-use development in Bandar Kirara, Selangor. Persona Metro's subsidiary clinched a $247.5